Did you know that if you're a single filer for the 2024 tax season, you can make up to $47,025 in dividends and pay $0 in taxes?
All right. So no matter what, I'm going to get some money.
Welcome to the Power 5 Stocks of the Week for the week of January 1st through January 5th. This series is a crowd favorite here on the channel that comes out 30 minutes prior to market open each and every Friday. No matter if you're looking for quality dividend stocks with higher yields, great dividend growth rates, or something in between, this series is sure to have something for you.
For me. And for me.
Now let's go ahead and jump right into this week's first stock. This week's high quality stock leading the pack with the highest dividend yield is Park Bancorp, stock ticker PKBK. Park Bancorp is a quarterly payer in the financial sector, paying 72 cents per share per year with a forward dividend yield of 3.64%. Park Bancorp has been paying and growing their dividend over the last 9 years. They have a 3-year dividend growth rate of 5.63%. A 5-year dividend growth rate of 11.13%, and a payout ratio of 28%. At the time of recording, PKBK was trading 5.03% off of their 52-week high. They have an ex-dividend date of January 2nd with a payout date of January 17th. And here on my channel, I like to compare any and all investments to the return you could have otherwise gotten out of the S&P 500 in the same time frame. With that being said, a single investment of $10,000 into PKBK 10 years ago while only reinvesting dividends since then would have grown into $36,311.92, which comes out to a 13.76% year-over-year return rate, which is compared to the S&P that would have grown that same 10K over the same 10 years into $31,123.67, resulting in a difference of $5,188.25 on the side of PKBK. This week's stock that's been paying and growing their dividend the longest is Erie Indemnity, stock ticker ERIE. Erie Indemnity is a quarterly payer in the financial sector, paying $5.10 per share per year with a forward dividend yield of 1.55%. Erie Indemnity has been paying and growing their dividend over the last 33 years. They have a 3-year dividend growth rate of 7.24%, a 5-year dividend growth rate of 7.23%, and a payout ratio of 60.36%. At the time of recording, ERIE was trading 0.28% off of their 52-week high. They have an ex-dividend date of January 5th and a payout date of January 23rd. And that single investment of $10,000 into ERIE 10 years ago while only reinvesting dividends since then would now be worth $60,164.52, which comes out to a 19.65% year-over-year return rate and outperforms the S&P 500 by $29,040.85 over the past 10 years. This week's stock that believes in giving you a lot more money year-over-year is Owens Corning, stock ticker OC. Owens Corning is a quarterly payer in the industrial sector, paying $2.40 per share per year with a forward dividend yield of 1.62%. Owens Corning has been paying and growing their dividend over the last 10 years. They have a 3-year dividend growth rate of 26.66%, a 5-year dividend growth rate of 18.14%, and a payout ratio of 15.69%. At the time of recording, OC was trading 4.3% off of their 52-week high. They have an ex-dividend date of January 5th with a payout date of January 19th. And investing $10,000 into OC 10 years ago while only reinvesting the dividends received, that would now be worth $43,115.49, which comes out to a 15.73% year-over-year return rate, which beats the S&P by a total of $11,991.82 over the past 10 years. Before we get to the last two categories in today's video, please make sure you've done your part to support the channel by clicking the like button, and then make sure you're subscribed with the bell rung so you don't miss any of my upcoming uploads. Help me help you make 2024 your best investing year yet. All right, now let's uncover these last two stocks. This week's stock that did the best job of making you money is Cadent, stock ticker KAI. Cadent is a quarterly payer in the industrial sector, paying $1.16 per share per year with a forward dividend yield of 0.42%. KAI has been paying and growing their dividend over the last 11 years. They have a 3-year dividend growth rate of 5.38%, a 5-year dividend growth rate of 5.05%, and a payout ratio of just 11.35%. At the time of recording, Cadent was trading 1.49% off of their 52-week high. They have an ex-dividend date of January 3rd with a payout date of February 1st. And again, we have that one-time investment of $10,000 into KAI 10 years ago while only reinvesting dividends since, which would now be worth $74,965.13, which is a 22.31% year-over-year return rate, which more than doubles the return of the S&P and results in a difference of $43,841.46 on just 10K just 10 years ago. Which leads us to the last stock in today's video, which is the one that could be at the most attractive buying price. That stock is Royal Gold, stock ticker RGLD. Royal Gold is a quarterly payer in the materials sector, paying $1.60 per share per year, with a forward dividend yield of 1.31%. Royal Gold's been paying and growing its dividend over the last 22 years. It has a 3-year dividend growth rate of 10.11%, a 5-year dividend growth rate of 8.31%, and a payout ratio of 42.74%. At the time of recording, Royal Gold was trading 17.17% off of its 52-week high. It has an ex-dividend date of January 4th and a payout date of January 19th. And you know the drill. That single investment of $10,000 invested into RGLD 10 years ago would now be worth $31,430.73, which is a 12.13% year-over-year return rate, which despite falling from its 52-week high, still managed to outperform the S&P 500 by a total of $307.06 over the past 10 years. And just like that, I was able to show you 5 different dividend stocks that are the best of the best. These stocks not only come with a dividend streak of at least 9 years, but they've also outperformed the S&P 500 over the past 10 years and have ex-dividend dates of this coming week.
Unbelievable. This guy.
Be sure to let me know down in the comments if any of these stocks seemed interesting to you and deserve a deeper dive. And if it's your first time here, be sure to check out this playlist for some content that's sure to make you a better dividend investor. But until next time, see you.